Hello and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching. And US consumer confidence has slumped to the lowest level in almost 12 years amid mounting anxiety over a sluggish labour market and elevated prices. The Conference Board said its consumer confidence index plunged 9.7 points to 84.5 in January, which could see households becoming more cautious about spending. And that will be a consideration for the Federal Reserve, which has begun its two-day policy meeting. Investors broadly expecting rates to remain unchanged. Attention will be on policymakers' guidance, with traders alert to any signals around the Fed's leadership outlook. And US Treasury yields were mixed ahead of the meeting, with the 10-year at 4.23%. Markets pricing in no chance of an interest rate cut at this week's meeting. Meanwhile, the dollar has sunk to a near 4-year low against major currencies, with traders keeping watch for possible coordinated currency intervention. The Aussie, though, just dipping below that 70 US cent mark ahead of our key inflation data. Let's get more on that and all the technicals and join Tony Sycamore from IG, who's on set with me. Good to see you, Tony. Just back from the US, and what are we seeing in terms of the momentum in the Nasdaq?
In the Nasdaq, well, things have certainly started to pick up actually over the last week or so. There was a little rocky period when the Greenland tariffs were announced, but it's sprung back very, very well, and it's now just not far from that record high we saw there, that 26,182 high. I suspect that with the earnings coming out over the next 24 hours, we've got some big earnings, Tesla, Microsoft, Meta. You're probably going to see that uptrend continue. And what's interesting is happening, you mentioned the consumer confidence overnight, particularly soft, down to the lowest level in 12 years. And we need to remember that consumer confidence in households account for about 70% of US GDP. So at this point of time, that's a concern for the broader market. But at least for the Nasdaq, those tech stocks, we're going to be looking for validation that this uptrend has returned, and potentially some of the wobbles we saw around the AI trade that commenced in the final months of 2025 starting to be put to bed.
All right, well, when it comes to our market, I was just having a great chat with Juddy about the fact that because of this sort of concern about US exceptionalism, but also the rush to commodities, we're looking at a very good place. What are you seeing in terms of potential resistance levels?
Spot on. I mean, for the Aussie dollar, if we sort of can cement this break above 70 cents, which we're flirting with now, it'll depend on the CPI data out in just a few moments. But overall, we get above 70 cents and the next level becomes 71.50-ish. I mean, you can see on the chart there, the Aussie dollar has gone parabolic. That really kicked off from those Greenland tariffs again, but the scramble, the new highs in gold, the new highs in silver, copper, etc., those trends don't look like they're 3-month or even 6-month type trends. They appear to be trends which, with national stockpiling, with export restrictions, with the uncertainty out there, they look like they continue in the year ahead. And 71.57 would be the short-term target. And then above there, potentially we head to that 75 cent level, which has been such a big level for the Australian dollar over the past really since it floated.
You came back from the US from the wrong time then. What about the overall market? Only slightly higher today, as you see. A lot is depending on this CPI data.
Yeah, I mean, look, the ASX 200 we're in such a great position here in Australia given what's going on. And it's not always the way. We have periods where we're so out of favour when tech's the flavour of the month. They don't want to know about the old economy. But right here, right now, things are doing really well for Australia in the ASX 200, particularly the materials sector. That's up about 50% since July the 1st, those big mining stocks, etc. So for the ASX 200, we have had a pretty impressive rally from those lows. I expect it to continue to lead to a retest of that 91.15 high. And when I was chatting to Nadine this time last week, we were talking about the importance of support around 87.50. You can see there it held support very nicely down there, that blue line, 87.65 the low. And here we are, we're going to be knocking on the door of 9,000 and that record high in the not too distant future, in my opinion.
Gold, I mean, where does it go now, particularly if the US dollar keeps being sold off?
Well, I mean, that's the question. No one knows. I mean,
Yeah.
5,000 seemed like such a long way, middle of last year, but it's got there. And now the question is, do we go to 6,000, 7,000? And nobody knows. That's the honest truth. What we do know is that the momentum remains strong. We know that there is certainly a lot of uncertainties out there at this point of time. So any pullbacks you see, I think, are going to be well supported. But we're looking now at possibly 5,000 as the support level, which it's a long way away. But yeah, right here, right now, things looking incredibly strong for gold.
And when we look at digital gold as well, you say it needs to return to its safety of that $90,000 trend first before it kind of pushes out.
Yeah, spot on. The rally from the November lows appears counter trend or corrective to me, and it doesn't look like a trend reversal. And you can see the trend channel that you just mentioned there, it slipped below there on the weekend. It's knocking on the door trying to get back above into that safety of that trend channel, which comes in just a smidgen above $90,000. And look, I mean, I'm not surprised there was buyers operating down there ahead of the lows we saw there at the end of last year, but it just doesn't inspire me when I look at that chart. For me to get a more positive outlook on Bitcoin, I'd really need it to break out of the top of that trend channel and then above the 200-day moving average, which is sitting at 105,000. Until then, to me, the risks are still to the downside.
And more broadly in terms of the risk, particularly as we're looking at this, very big sell-off in the greenback that we touched on, a lot of concern about, I was just talking to another guest about potentially we're in a pre-war era. How do you see the overall macro trends play out?
Well, I think the dollar, I mean, you've had Trump shrug off the weakness this morning, you've had Euro above 120, you've had the DXY, which is the US dollar index, breaking above multi-year trend line support. Not confirmed yet, it is a monthly chart that I refer to there. We've still got 3 days left of January, but if that break lower is confirmed at the end of this month, I think the trend out there is going to be an ideal one for FX traders. You know, you've got such a great supportive backdrop for the Aussie dollar, whether it be because of precious metals, whether it be because the US dollar's selling off, whether it's because some of these big funds here in Australia are looking to hedge their asset exposure in offshore markets, in US dollar markets in particular. So, you know, so many reasons for the Aussie dollar to go higher. And I think if I was looking at where the trends and where the opportunities are potentially going to lie, this US dollar trend, it could go another 10% lower.
Wow.
So if that break low is confirmed, so that would be a wonderful opportunity for traders, you know, at the very early part of this year.
Could go back to parity party days, Tony. All right, thank you so much. Great to see you, Tony Sycamore from IG. That does it for this edition of The Trade. Be sure to join us next time.